everyone, welcome back. You know how we often look only at the interest rates when borrowing money. It turns out that's a trap. Today, I'm going to show you how to look at the real cost of a loan so banks can never trick you with hidden fees again. So, what exactly APR? Think of it this way. The nominal interest rate is just the price of a money itself. But the APR is the total package. It forces banks to cover all those annoying closing fees and administrative costs into an early percentage rate. Annual percentage rate APR. Look at this formula. APR equals interest change, interest charge plus total fees divided by principal and all divided by die in terms of a number of die in years multiplied by hundreds. Don't let the math scare you. It's simply take you interest expense and all this extra fees divide it by our actual loan principal and normalize it over a full 365 die years. This is how we find the two costs. The principal, the actual amount you take home, and the fees, application fees, processing charge, and compulsory insurance. Imagine a bank offer you a super low 3% interest rate. Sounds amazing, right? But then they hide 2,000 in application and file fees in the fine print. Suddenly, that loan is way more expensive than a 4% loan with zero fees. That's why comparing APRs in our ultimate shield. I explain a little bit more. They propose you a lowest rate, but to get the money, you must prepare a lot of paper and you must get a lot of insurance. So, the money you need to prepare it, that's full the higher percentage of the APR. So, instead of 3%, you have 4% annual rates. When should you use this? Every single time you shop for a debt. Whether you are applying for a credit, buying a car, or looking at a mortgage, you use the APR as your Apple-to-Apple translation tools. It standardized everything so you can spot the cheapest offer instantly. Let's do some quick math together. If you borrow 10,000 at 5% advertised rate, you expect to pay 500 in interest. But if the bank hits you with 300 upfront processing fees, your total cost jump to 800. In reality, your true APR is 8%. See how the advertises rat hid a massive chunk of the costs. Think about when you buy your car. A dealership A might scream for that 5% interest, while a dealership B offers 5.2%. Most people rush to the dealership A, but after adding A's mandatory dealer preps and document fees, their APR climbs to 6%. The dealership B is actually the cheaper deal because their APR stay at 5.2%. Think before acting. The stake get even higher with a home mortgage. Over 30 years, at a tiny 0.2% difference in APR caused by administrative fees can cost you tens of thousands of dollars. When a broker gave you a quote, look past the monthly payments and demand to see the final APR breakdowns. Here is an insider secret from financial experts. You can actually negotiate ancillary fees. Lenders cannot easily alter their base interest rate because of federal margin, but they have a huge control over application, file, and processing fees. Tell them you will walk away unless they drop those fees to lower your APR. To sum it up, debt is a financial tool, but only if you control it. From now on, whenever you look at credits, look for the APR. It's your ultimate shield to save cash, eliminate sharp rise, and build real wealth. Got your spreadsheet ready for your next big financial move. I think that is for today. Thank you very much and see you soon. If you have a question, don't hesitate to write in the comments and subscribe in our channel. Thank you.